Hey, Brad, you've talked before about how you don't let options that you've sold go out into expiration. You buy it back before the expiration date. I wanted to know why that is. It seems like to me it would make more sense to let it go out into expiration, assuming, of course, that it's out of the money, so that you collect 100% of the premium you got initially. And I just wanted to know why you choose to buy it back before the expiration date. Awesome. Thank you for the content, man. Keep it up.
So awesome question. And to answer the question is it has a lot to do with time, but I think even more profit. All right. So let's look at the options. Essentially, you're asking me, why not wait and get 100% as opposed to you close? If you do not know, I like to close my wheels at 75% profit. So if I sold it and got $10 in premium, when the value gets to $3, I give that $3 back. I keep $7. That's the end of the day. With my poor man's covered call, even smaller, like 40%, right? Because I have to worry about that leaps option. Why not wait for the 100%? Here's why. Let's say we have an expiration of Friday. Barring major movement in the share price, the value of that option, because of theta, because of extrinsic value, the value of that option is going to be as close to zero as it really can be in relation time-wise to Friday. I'm not saying that the value is not going to drop more by Friday. I'm not saying that. What I'm saying is that the amount it's going to change between Wednesday and Friday isn't worth it for me when I can roll my option on Wednesday, roll it out now instead of Monday to Friday, like a 5-day expiration, which is going to give a certain amount of premium. The further I go out, the more premium I expect to collect. So instead of looking at the option as a weekly that has a fixed Monday and Friday, and then the option then goes on to the next fixed Monday and Friday, what I would ask you to try and do is think of your weekly options on a 2-week timeline or like a 10-day timeline. Because when you do so, you can now look at the profit over that 2 weeks. Now, granted, and once you get to that 2 weeks, you'll see this, and this is why I've established this kind of mindset of let's close and move. Because when you start to move it out to a month and even further, you really see the massive difference. Let's go back to that $10 strike. On Wednesday, it's 75%. So I got that on Monday for $10, 5 days away. All right. What happens on Wednesday, the value has dropped. Theta, the share price, whatever. It's dropped to $3. So now I look at two things, and here are the two things that you need to think about if you want to wait till expiration or roll. You think to yourself, all right, do I want to wait till Friday to get $3 more? Or if I look out to the following Friday, what is that going to be? Because let's say now that you've added 3 days, right, on top of the standard 5 weekly, now what you've done is just collected some more premium. Now, how much more? We don't know. But essentially, right, if it's more than $13, you win over that 2-week time frame. Why 13? Well, because if you got this one for 10, you can expect next week's probably going to be about 10, right? So you can do a 10 and a 10 and hope everything works out perfectly just the way you want it, and you'll make $20. Or you can take 10, give back 3 on Wednesday. Now you're at 7. And then as long as next Friday out is 13, you got the same exact 2-week premium of $20, but you eliminated the chance of some BS happening between Wednesday and Friday and screwing up the 1-week option. It's really protection. When you write calls, you have to think in the back of your mind, collect premium, get to a profit that I want, put some money guaranteed in my pocket, and get the F out, and then roll and do it again. All right? And from my experience, when I get to that 75% mark, whether that's Tuesday, Monday, whatever, when it gets there, when I roll to the following Friday, I collect more premium for that larger gap in time than if I did 2 weeklies at the same exact price. Do you know what I hope that makes sense? Like going to when do I go to expiration? I go to expiration if I'm losing, right? If you're wheeling, I never close wheels ever because I don't mind assignment. I've picked my strike price right. I've picked my shit. Everything's done right. So I don't mind getting assigned. So my wheels, I'm going to hold them. Okay. So this close at 75%, I mean, and this is out of the money. When I say I'm never going to close them, that means like if I have to like protect them, like I don't want to get assigned. But like I said, 75%, I've seen so many times, not only from me, but from other people, that when I thought I was so golden and I thought that I had a lock for the thing to expire worthless, and I was like, I'm going to get 100%, baby, let's go. And then like Wednesday afternoon, news came out and the share price went up and I'm like, ooh, damn it. Then on Friday, it opened after pre-market. It opened so much higher. And now my option was like more than I could buy to close at a loss. And that can happen after market because we know with these options, we really can't close them off hours. So there's a lot more volatility and danger in off hours. It's happened. There's people in the chat, I'm sure this has happened to as well. You think you're golden on Wednesday. You think you're golden Friday morning. And by Friday afternoon, you're up shit's creek without a paddle. So you had to add 3 days of stress and time for 20% more profit. Now, if this was the last wheel you were ever going to do, you were never going to sell another call ever, yeah, get your 100%. I don't personally, though, think of my options as start and end. I think of my options as start, roll, 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 roll. Then when I'm done rolling, then it comes to an end. Or start, assignment. Start, assign. You know what I'm saying? So when look at that next time. Look at what you would have to buy to close. And then on that same exact time, in that same exact instant, look out. Now, maybe something crazy happened where you got that $10 on Monday and now it's at $3 and you look out there and it's only like worth $6 now. Okay. Maybe you want to wait a little bit and see if you could change the value for that future Friday. I very rarely have seen that happen. So that's kind of the main reason. The main reason is to protect myself because I know that things can go wrong. And for me, right, was it Warren Buffett that said, my faults are going to be due to omission, not commission. If for me, I would rather take out 75% profit and lose 30% in the next 2 days by omission, by getting out and not being a part of it, than losing by commission where I get greedy for 30% and then something happens and I lose the whole option and the whole shares and everything. That's really it. So if you have ice in your veins, sheesh, hold it till expiration, ride it out. But for me and my experience and the experience of the people in my Discord, I think people just get a lot more happy when they think of it as a 2-week. Your options are not weeklies or monthlies. Think of them as like 10 days or 2 weeks. I hope that answered your question, bud.